Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsarthi. And as the rupee is going towards rupees 80 to the dollar, weakening to record lows, the default risk of junk bonds is increasing day by day. Just before we continue, do not forget to download our app, Quick Invest by INR Bonds, where you get the best bonds curated for you to invest in such uncertain conditions. And with the most information and our own proprietary risk rating that makes you avoid all kinds of credit risk in the bonds that you invest in.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Coming back to the market highlights, the Gsec yields were slightly higher, while the equity markets were volatile, a bit volatile. The rupee is again trending to record lows. US Treasury yields at over 3%. And Crompton Greaves is issuing 1.5-year bonds at 7.4% levels, which is a decent level for the company. Given coming back to junk bond yields, which are coming into default territory, the biggest worries, the biggest drivers for junk bonds is money in the system and low interest rates. Now, with low interest rates becoming higher interest rates because of inflation, and money in the system also getting out because of various factors, including the fact that global central banks are now taking money out of the markets. And in domestic markets, there has been the steady decline of the rupee as forcing RBI to sell US dollars, and that is taking out money from the market, as well as the fact that RBI has to look at inflation control. So when these two factors are disappearing, then the junk bond yields have a very tough time. The yields have gone up for many issuers very sharply. And here, when I mean junk bonds, these are bonds that are trading at well over 12%, going all the way up to 18 to 20% yields of various maturities. But even then, at such high yields, it's very difficult for any company to actually service that debt. So hence, investors who are looking at very high yields have to be extremely careful and wary of, and have to factor in default risk unless they are very sure of companies they are investing in. Thank you very much for listening in. Do not forget to subscribe to our YouTube channel if you've not done so already.